Man, I'm starting to think United Health just loves attention. It is down about 16% in the past 5 days. This is because of recent news that they expect revenue to decline in 2026. Now, even looking at the max history of the chart, we can see that the stock went up, yes, and it did a lot of return in terms of percentage, but right now it's at this level. And also recently we saw that Warren Buffett as well. So let's go ahead and take a look at the numbers, at the intrinsic value, and see if this stock is a good investment to add to our portfolios. Now, this isn't the actual intrinsic value we're going to be taking a look at. This is going to be sort of like an average. This gray line here is what the intrinsic value should be, or the average of the intrinsic value. This red line up here is where United Health has been in the future. And then this is where it's currently at now. So if it's below the line, it's undervalued, meaning that you could possibly buy it. If it's over the line, it's considered to be overvalued. Before we get into the rest of the metrics, let's go ahead and take a look at what analysts in Wall Street are saying about this stock. Now, this is a rating based out of a 1 to 5. It currently has a 4.07, which consists of 28 total analysts in the last 90 days. It has 14 strong buys, 6 holds with 2 strong sells. Now, once again, this isn't the intrinsic value we're going to be looking at, but this is the average price forecast that those analysts are expecting for the stock. They have a low end of 280, they have an average price of 376, and they have a high price of 440. Now, if we take a look at some fundamental analysis, if we compare the price to the EPS of the company, if you've been in the channel before, you know I like to buy companies that have divergence in their price and in their fundamentals. For example, their price compared to the EPS, to the revenue. Usually, if the EPS or revenue or operating income is increasing, but for some reason the price is decreasing, is usually something else wrong with the company apart from the fundamentals. For example, as you can see here, United Health had dropped earnings and their price was going up, and then when they started increasing earnings once again, the price started to drop. Doesn't really make a lot of sense to me. Of course, this happened because of a few reasons. What happened with the CEO, whole Medicare situation that's going on in the United States right now. It's a lot of reason apart from the fundamentals, but I like to see this. Okay, of course, right now they're decreasing in EPS and they also expect revenue to decline, so this is not very good. Take a look at the shares outstanding compared to the price. They've maintained almost the same, decreasing a little bit, but the price has dropped. Usually when there's less shares in the market, the price of the stocks increase, because the less shares in the market, that means the more value your stocks have, so the more value your investment has. And then if we compare it to the revenue, we can currently see that the revenue has been increasing and increasing and increasing. They are expecting to decrease in 2026, but as you can see, even before they were increasing revenue, their stock price was still dropping. And keep in mind that Warren Buffett bought around these levels here of 300, 314, somewhere around there. So I'm eager to see what he's going to do now that the stock or the company expects revenue to decline in 2026. Because if Warren Buffett sells out of the stock, it's not going to be very good for United Health. This is going to completely plummet because just the market likes to listen to him. Now, I'm not sure if this is a bug or what happened here, but there's no gross profit currently. I believe it's a bug with the system, so let's move on to the next one. Here we compare the price to the operating income. We can see we had a steady growth and then all of a sudden we started dropping, so maybe the fundamentals for the company aren't that great. I did a video in the past about United Health. If you want to go check it out, it's in the channel, but this is the recent most updated fundamentals and income sheet as well. And then again, if we compare the price to the net income, we can see here the price was decreasing, the stock price was going up. All of a sudden we increased in net income, and then the stock started dropping, but the net income did as well. So this already I'm not liking. Usually you want to see something healthy like this, steady going up. Now if we take a look at the overall financials for the fiscal year, we can see that revenue is up 8%, but everything else is not doing too good in terms of operating income, of EPS, of net income. This is usually not the metrics of a company that someone like Warren Buffett would invest in. So let me know in the comments below, why do you think he did invest in it? Although it wasn't completely him that made the decision, he had already retired from Berkshire Hathaway when the decision was made. So I'm eager to see why they did invest in this. Is there something they know that we don't? Maybe, I don't know, but this doesn't look like a company he would invest in. And then, of course, if we take a look at the assets compared to the liabilities, you always want the assets to be more than the liabilities. They're currently sitting at 315 billion compared to 219 billion in liabilities. If we take a quick look here at some company efficiency, like the net margin, we can see it's only on 4%. The return on equity, 80%. Nothing too crazy, but it's still better than to be negative. Now, they do pay a dividend, which is about a 3.09% yield, giving you $8.73 per dividend. We're going to take a look at how safe that dividend is, for how long they've been increasing the dividend, if they have been, and what the payout ratio is for the company as well. And something that I do like to see is that they do have a buyback yield. It's a low yield, but it's still a buyback yield. That means the company is buying back its own shares, meaning they believe the company or the stock price is cheap right now, therefore they're acquiring more shares more shares because they believe it's undervalued. Now, if we take a look at the dividends for United Health, we can see that they have been growing their dividends for the past 16 years. So after although hell broke loose with United Health, they still maintain their dividend. They do have a 5-year growth rate of 12.57, which I consider to be very decent. But again, yeah, the payout is $8.84 per share, and this is going to be increasing about 12% on average for the next 5 years. So let's get to it. What you've all been waiting for, the intrinsic value for United Health. We're going to be taking a look at 3 cases. It's going to be, as you can see, the base case scenario, the best case scenario for the stock, and the worst case scenario overall. So on the base case scenario, we can see we're still undervalued by about 36% with a potential stock price of $438. The worst case scenario, we're still undervalued by 14%, giving it the stock price about $329. And then the best case scenario, there is an undervaluation of about 54%, meaning the stock could potentially be worth $610. Now, with all the recent news and everything going on with this stock, I'm not sure how possible this is going to be, but I'm eager to know in the comments below what you think of United Health. As always, guys, if you enjoyed the video, please consider leaving a like. Don't forget to subscribe. And as always, I'll see you in the next video.